Most people in the USA cannot buy a house with full cash. That is why mortgages exist. A mortgage is a long-term loan that helps people buy homes, but many buyers do not fully understand how it works. In this video, I will explain what a mortgage is and how home loans work in the USA, step by step. A mortgage is a loan given by a bank to buy a home. The bank pays the seller, and the buyer pays the bank back monthly. These payments usually continue for 15 to 30 years. Until the loan is paid off, the bank has a legal claim on the house. A mortgage payment is not just one thing. It includes the loan amount, interest, property tax, and insurance. Many first-time buyers only think about the loan amount, but the extra costs can significantly increase monthly payments. Interest is the cost of borrowing money. Even a small difference in interest rate can change the total amount paid over 30 years. That is why buyers with better credit scores often save a lot of money. A 30-year mortgage has lower monthly payments but higher total cost. A 15-year mortgage has higher monthly payments but lower total interest. Buyers choose based on income stability and long-term plans. A mortgage is a long-term responsibility. Missing payments can create financial stress. That is why understanding the loan before signing is very important. Mortgages make homeownership possible in the USA, but they should be taken carefully. This video is for educational purposes only. Subscribe for more USA property and money guides.